August 13th, 2012, we had David Burrows of Barometer Capital on the program. At the time, he brought with him two top picks and option number three. Top pick number one from that point was Gibson Energy. You're up about 8.1% on that. You still believe in it?
You know, we have been a shareholder of Gibson since it went public, and we've been big energy infrastructure holders. We recently have come out of Gibson over the last few weeks. One of the acquisitions that they made looked as though they was giving them some difficulty. And if you saw the numbers today, you saw that did have an impact. We really like energy infrastructure. We think Gibson's a great company. They got to work through the issues with their acquisition.
So to clarify, do you or do you not currently hold shares?
We do not currently own shares, but we have been a seller over the last month.
All right. I see as well that the herd is with you on that. It's moved into oversold territory on the relative strength index. Do you see a bottom at some point? I need to go back to November of last year before we see an intermediate bottom.
Right. We buy good getting better. We don't buy broken getting fixed. I'm not saying it's broken, but the numbers are going the wrong way right now. So we need to see the numbers start to improve, share price start to improve, and there's other companies within the group that we have more faith in currently.
All right, top pick number two is McDonald's.
Yeah, so we have been focused over the last year in consumer space. We have since exited McDonald's and rotated to Starbucks. As you may recall, earlier in the year, McDonald's came with same-store sales that came in under what was expected after several quarters of beating estimates. So that for us is a cue to make a move out. Starbucks is going the other way. They're getting very good same-store comps and gives us a similar exposure. The higher-end consumer discretionary seems to be doing a little bit better than the lower-end consumer discretionary, and that's where we're more focused.
Sort of that wealth effect?
It's a wealth effect, and certainly, you know, Starbucks specifically has a bunch of different drivers and levers to pull for growth globally, and probably a little bit more opportunity.
McDonald's is trading 17 times forward earnings. Starbucks is trading 33 times forward.
You're definitely paying up for the quality, and I'm not saying that there's a problem with McDonald's. I mean, if you look at it, they have had a 5-year dividend growth of 15% a year. You know, they're paying out a relatively small percentage of their earnings. You're basically buying a REIT because a lot of their income is rental income they're getting from their franchisees. Very stable. It just may be there's places to make more money currently.
Starbucks itself, though, only has about a 1.2% dividend yield or so. You're clearly not buying it.
You're buying growth and multiple vision. To be clear, if you look at the move in the S&P 500 this year, almost all of it has been earnings multiple expansion, not necessarily earnings growth. So where you can find earnings growth, it's trading at a bigger premium, and that's what we're focused on.
Top pick number three from when you were on the 13th of August of last year was cash.
Yep.
It is king, particularly at that time. What percentage of your portfolio, of your investable cash, is sitting on the sidelines now?
So we are quite tactical, as you know. So we will go to the sidelines, and last summer there was a lot of headwinds and concerns around Europe. We're pretty fully invested. Now, we're focused in the U.S. We have very little in Canada. We have very little EM. There's certain sectors we're almost void of. But there are some very clear themes: consumer discretionary, industrials, healthcare, and financials. And there's lots of opportunities there.
You mentioned healthcare. Where within healthcare in the States would you want to be right now?
So you may recall we've talked a bunch of times about pharma companies like Merck and so on. We like pharma. We like biotech. We like the healthcare providers, and we like the insurance companies in that space. So this is one of the best performing sectors in the market year to date, and after 12 or 13 years of real underperformance, it's the biggest industry in the U.S. And investors are coming back for the predictability of the cash flow and some pretty good dividend growth.
Energy-wise, is there any particular area you want to be in right now?
Very specifically, there's certain geographic regions. As a whole, we don't like the space. Permian Basin is very interesting. They're starting to frack sand as opposed to shale, and there's some big winners in that space.
All right, well, let's take a break and come back, and maybe we'll talk more about that.
Great.
David Burrows is here from Barometer. We're talking with the Chief Investment Strategist about your North American large caps. We've got a line available still at 1-855-326-6266. When we come back, we'll get back into the conversation about energy-related stocks.